All right, everybody. Good evening. It is 8:30 Central, 9:30 Eastern time. We're going to be doing our Iris Wedge Alert. So let me go ahead and do the disclaimers for you guys. Trading foreign exchange on margin carries high level of risk and may not be suitable for all investors. The high degree of leverage can work against you as well as for you. Before deciding to invest in foreign exchange, you should carefully consider your investment objectives, level of experience, and risk appetite. The possibility exists that you could sustain a loss of some or all of your initial investment, and therefore you should not trade with money that you cannot afford to lose. You should be aware of all the risks associated with foreign exchange trading. Seek the advice of a financial advisor should you have any questions or doubts. Again, this room is for educational purposes only. No financial advice or recommendations are going to be provided tonight. If by chance Al or myself take a trade during this session, it's not any sort of recommendation that you should do the same. Past performance is not indicative of future results. And again, we always encourage you to trade with a trade plan, knowing what your entries are going to look like, what your exits are going to look like, targets, and risk management before you ever start. Al, are you available and ready to roll? If he's there. We'll make sure you guys can hear me. Can you guys hear me? Make sure if you put it in the chat box, yes or no, because I'm not hearing Al at the particular time. We'll make sure you guys can hear me. Perfect. Okay. Al may not be at the table right yet. So let's go ahead and jump in and see what we got here. I haven't looked at it for quite some time. See if we got anything recently. All right. Y'all should be able to see my screen as well.
Okay,
Al will jump in here.
Al,
I'm not hearing I'm seeing your microphone moving, but I am not hearing you.
Okay, I just heard you now. Can you hear me now?
I want to make sure everything's turned up here. So we've got 1850 on the Aussie.
Test.
So you hear Al? I'm not hearing Al. So let me check something on my end. Okay, Al, go ahead and share your screen then. And since you are here, if everybody hears Al, then that's the key person, not me. I'm going to stop sharing my screen.
And you go through all the disclaimers, all that.
And I'm going to mute myself and try to figure out why I cannot hear you, Al. But I'll keep an eye on the chat and the Q&A area for you.
Okay, so everybody can hear me. I'm assuming you did all the disclaimers and everything. Okay, all right, welcome everybody. Glad to have you here tonight, and we'll get started here. And if you have any questions, I didn't hear Brian before, so if you have any questions, put them in the Q&A box. That'd be easier for us to keep track of. We'll have the chat box up, but we'll see what we can do. And the last alert we had was on the Aussie US, and that was at 7:15 this evening. I'm going to do a replay on that. Can everybody see my screen? Just give me a little check or something so I can see that you can see my screen. And give me a hand raise or just something. I'm going to make sure that we can do this.
I finally can hear you now. Sorry about that.
Okay, you can hear me, and everybody can see my screen, correct?
Yeah, I think that's that's yours.
Okay, all right. Well, it's a little
technical, exactly like mine, so we're good.
Early technical difficulties here, so
yeah, we're learning to overcome them. So if you guys have questions by chance, make sure you put it in the Q&A instead of the chat. It's easier for me to see. Just make sure.
Okay, and we'll get started here. Actually, there's right now the last alert was at 7:15 this evening, the Aussie US. So I'm going to do a replay on this since it's already pretty much in play or out of the chute. So anyway, we had the 7:15. Right now I'm on a 5-minute chart just because I'm going to do the replay on this. I brought it back to the A at the 350 level time frame. This is all East Coast time. My B was set at the 6 o'clock. That was right after the changeover of the day, and then I brought it down to the A to the C, right to the low of the candle before the alert happened. So that's our starting point. And right now we have all of our moving averages on the 5-minute chart are inside the wedge, and they're not really in the right direction. We have the 62 right here, and usually we want to have the 62 above the yellow above the green, if we're looking at going down. But right now, it's showing on this 5-minute chart, it's showing strength to the US dollar, which is the second currency of the pair. And that means that the dollar, we're looking at to go short with the dollar strength to the Aussie. Right now, the Aussie is showing the weakest and the dollar is showing this next to the strongest. So we're going to do the replay. I drew the wedge. I'd have a 2-pip parallel to the bottom of the wedge in case it breaks out. I want to see a little bit of a basing, a red candle followed by a blue candle, all within inside this zone, and then take it short. Our levels are going to be relatively tight. If we do get a break, even this lower level from the top of the wedge, if let's say we get a break in this area right here that's only 9 pips to the second yellow line. So it's going to have to get somewhere in this zone in order to meet our target price. So anyway, our RSIs are moving in the right direction. They're all below the 60-40 zone, heading down, going into the 11% area. Our whole moving averages are all red, and everything's saying to go short. So if this thing breaks out, we're good to take the trade. And so we're going to put this on a 1-minute chart, if I can get it there. And it takes it. I'm going to slide this one over just a little bit. Now my moving average, my RSIs are now pointing in the up direction. We still have 3 red whole moving averages, and we're just waiting for the RCS to come into play here. Just has to catch up here a little bit. There it is. And the dollar is still showing showing the weakness, even though it's in a little bit of pullback. We're waiting for it to come down, break, and close into the wedge. Close below the wedge, rather. There's the first red candle close. It has a little bit of a basing right in here, which is a good sign. We have the red candle, and this is showing a nice spread of 6-point spread. Everything's green, everything's pointing down. If you wanted to take the trade right here, I would be okay with that. Take it at this point, do this as a entry to sell. And I'll put the short position, if we can get it filled here. And take it to our default 7 pips both sides, which is right down to the second. And here we go. We'll keep on going with our replay. That's the second red candle. There's our green candle follow, and now we're looking for the next red candle to get in. If you didn't take it on this one, this would be the next red candle after this nice blue candle would be the entry. There's a red candle, so we begin this trade. And it's breaking down, comes back into the wedge, takes a little bit of heat. It still did not close above the bottom of the wedge. Still not quite ready to go. This is not the strongest time of the day to, right now we're looking at 9 or 7:30. That is I usually like seeing a little bit later before I take these trades. And there's pretty much about halfway to our target with that. And we're going to check and see where our fib lines are, see if there's any fib lines that are going to be a problem here for us.
Yeah, you also want to notice the whole moving average, the 3 bars are all red, and the U.S. has some great strength. And the
RSIs are all still pointing down. And so this is still looking good. This is still looking good. These are still pointing in the down direction. We have our 30-minute 62 right down here, which is below our target zone, which is a good thing because it will probably get a bounce off of that. It came very close right there to a target. I don't know if you would have gotten your pips in or not. If that would have been, that's right at 4 pips. A lot of times I like to see at least 5. If I can get 5, if it starts to stall, then I'll oftentimes take it off at 5. And there's our target right there. You may or may not have been filled with that, but if I see a break the bottom of my target, if it just stops like that, I would probably just go ahead and look at the next candle, and there you probably would be filled. Now you're back in. Now you're out of the trade. That was a nice little, you had your 7 pip target. Now it's coming back up to retest our zone. Now it's coming back up in near the wedge.
And notice your whole moving average went green on the 5 minute and the 1 minute.
Yeah.
So,
So
you've got a hesitation happening here.
Yeah. So this is where the pullback was. You can see where these things turn green. And now if we can get another 3 red bars with this RSI pointing down, there might be an interesting possibility to take another entry.
And you've also had an RCS flip to the Aussie being the strongest, the US being the weakest.
Right. And now that is also a 7 point. So that tells you that this trade is now what I would consider to be over at this point. You wouldn't want to be taking a short with this flip being, unless this thing flips back to the dollar being strong again. You still see the Aussie is still strong now to the dollar. It's back into the wedge. And a lot of times, if you only get 7 pips to the one side, a lot of times it'll break through the other side of the wedge and take off to an even stronger, stronger move. Now you see the dollar is still strong again. Again, this is on a 1 minute chart, so you don't really know. You have to almost double check and see where the other time frames are to make sure they would still be in the same alignment with that. Let me put this on a 5 minute chart and see if that can maybe help shed some light on this subject here. And we're on a 5 minute chart, 5 minute candles, and waiting for the RCS to propagate here. RSIs are still pointing down. We have 2 red whole moving averages. It's starting to bounce off this 62 on the 5 minute chart. This is the 30 minute 62 exponential moving average. And we'll see how it goes. And that's right where we are right now with the trade. So this is a strong support area. Came down, tested it once, came down, tested a second time. And I would say right now it's sort of range bound right in between this area right in here. Still respecting the bottom of the wedge, but we're have to see where it goes from here. Any questions? Okay.
This is the time for questions because it doesn't look like anything's really setting up new yet.
No.
So if even how to draw it, the basics, this is the time to ask, how do you draw your wedge, that type of stuff. So if any question, I'll put it in Q&A. You can even raise your hand and we might be able to practice with you guys of opening up your mic if you want to ask a question. We can try that tonight.
And one thing is, this was at 7:15, so this is right where the wedge was on the 15-minute chart. Now, there's a couple things too. When I drew this wedge, I did a little bit differently a lot of times. A lot of times I look, see where the wedge is. Now, especially when we're real close to where the change of the day was, I try and come back and see where the last previous pivot low and pivot high would have been, and I'd start by wedge drawing from there. This was the Aussie. It was at ascending wedge. Now, there's a couple different ways that I was looking at this one. Is that we could have gone from the pivot low, the previous pivot low, even though it's from the day before, because this time period between 7:15 and 5 o'clock, there's very little movement. There's only a couple pips movement in between there. So it's better to try and at least go to a little bit of the next pivot high as references. So if you start your A here, then you have to come up. Now you could take
You're having
B.
a question in the Q&A.
Okay.
Are you drawing the wedge right now?
I'm redrawing the wedge right now.
Is
yeah.
this is a descending wedge?
It's an ascending wedge.
Okay. So you have to pay attention to the alert when it says ascending or descending, because that will tell you where to start. In this case, it was a ascending, so you start with the low point first. That's what he's going over. So that was one of our questions in the Q&A.
Okay. And so there's a couple things. Is ascending, so I'm going to start here with the A at the bottom. Ascending means that it's going from low to high. So I'm going to start my A from the lowest point, moving my way up to the highest point. And then the upper part, I'm either going to I'll bring it down to where it connects as close as I can, or I might just bring it up so it's flat, even with the B. So now there's a couple of things you can look at with this one, is that there was a little bit of a rally at base, but this is kind of, if I put the A in here, it's still going from low to high, and I don't like the fact that this is kind of steep, and so if it breaks out of it, there's just an awful lot of extra pips in order just to keep on top of the wedge. I kind of prefer to have it a little bit shallower, but still have it be in the ascending mode. Now the problem with this is that when they got the alert, it immediately started breaking down to retest this, where the A was. So there's a couple pivot points that you need to be aware of. Is that one is this one right here, because this is going to be a target. This would be a target zone of, you have a low here, and you have I'm looking at this area right here, so I'm looking to see where did this big move, where did it start? It started down here, and how far did it go? It went all the way down, so retest this area. So this area right here is a area to be respected. So I'm going to mark this from the low here. I'm going to clone it, and we bring it down to right about in this area. What I like to do is I like to see where the wicks are. As soon as I get a wicks and hit a wall, I bring it down to the next bottom of the wick. So this would be the area that I'm going to be going. Now, when I say that, let me just give you a little bit of an example here. This is a little bit of price action analysis. Is that if you have and just looking at this area right in here, let me just draw this section out. And I think this is, oh boy, there it goes. So we have just this area right in this area inside this red box. If we take the target, our little, and you go from where, here's a wick, and if you come over straight across, there's another wick. So you come on down, you come straight across, and now you hit the wall. Right where this bottom wall wick is, if you come all the way down, you'll find out that wick, it would come down to a solid candle where the body of the candle, and you don't hit another wick. So then this would be a significant bottom right there. If I were to go a little bit further down, here's a wick, come over here, there's another wick, come down, there's another wick, come on down, there's another wick, and then that's the bottom till you get to someplace over off the screen. So that would be a significant area. And that's the way I usually do it, from when you have the big moves going up, where the blue candle comes in, where it has a wick, but you still have some body left underneath. And that's the significant zone. So this would be the area that I'd be looking at of a major concern to this wedge. I still have this little bit of a gradual incline. I have my pivot high. I'm going to flatten this out because this is going to be a significant area. If I take another, let's see, where is it here? If I take this candle, this line here, and I come to this wick, I go start with, here's a wick, here's the top of a wick, and it comes over here to the body. So from there, it hits the body, bring it up. This is the next area. So this is the area of interest here. From there to pretty much the top where the next wick is. And this would be the zone that I'd be looking at to see a little bit of a bounce off of if it comes up into that area. But you see that's also right above inside the wedge. So the next area, that's one reason why if I had this D all the way down here, I would still be looking at this area for a target. But if you see, if it broke the wedge over in, say, this area, you don't have but a couple pips to the upside. And so I would not be real anxious to take the trade with only 6 pips. I mean, if it broke right early on, you would only have like a 3 pip spread from here to here. As this slopes down, your target area is getting a little bit better, a little bit more conducive if it breaks the top of the wedge. But let's say you had the alert and the next couple candles that broke up, you only have 2 pips before you're back into an area where you might run into some problems. So you want to keep that in mind when you draw these wedges to see what's the potential target zone. Is it even worth taking the trade? Because remember, you have to get 2 pips for your spread and commissions, and then you still need to try and get at least another 5 pips. We shoot for 7 pips, but that's including the spread area to try and make it worth your while to see if there's enough room to take the trade. The other thing I didn't like about this one would have been the fact that our 62 exponential moving averages is outside of the wedge. And if it breaks down, you can see where this thing broke and it bounced around. Now it did finally break, but it came back, so it's respecting this area. And if it broke this and bounced, you would be really hard pressed to get your target out of that. And that's one of the problems with this time of the evening is that you don't always have the volatility and the volume in order to get those targets that we're looking for.
And if I'm looking at the clock right, that should start in about 10 to 30 minutes. 10, 30 minutes. Usually about this time, another 10 minutes or so, you'll start seeing things happening with the Aussie, Kiwi, Yen, those kind of pairs.
Right. And so, so we're looking at about 10 o'clock at night. I usually don't like taking trades with the alerts before 9:30. After 9:30, I'd be more apt to doing it. But the problem with that is, especially if you're on the East Coast time, you're trying to go to bed, the odds of you being able to get into your trade and get your profits are getting slimmer and slimmer as the later it goes, the more likely you are to get your targets, but you're looking at being up and nursing this trade for 1, 2 o'clock in the morning. And I just soon just not have to work. I don't sleep very well when I have an open trade. And so if you don't want to sleep at night or you're up all night, it's not a bad time to take the trade. But I usually wait till a little bit later, 9:30, 10 o'clock.
And just so you guys know, at the same time, you have the Central Time Zone. You got Western. The further west you go, the better off you're going to be. But normally, Al's trades, once he's entered a trade, it takes anywhere from 20 to 30 minutes for the trade to actually work out. But I've seen him and the team wait an hour to see that happen, hour and a half, 2 hours, for it to finally break the wedge and then finally retest it to take the actual trade. So be aware of that as well.
Right. You can even see, like right now, when we had this alert, this thing hasn't moved more than basically 13 pips from the time the alert happened for 2.5 hours. And 13 pips to move is that's just not enough room to have your alert, get your signal to take the trade, and then still be able to get your profit margin. Usually, I like to have at least 17 to 20 pips target area because you're not going to get the exact fill, and you're not going to get the exact target. A lot of times you're not going to get the exact target, and a lot of times it's just really hard with the less than 15 or 20 pips to make that range to get that 7 pips that you're looking for. And you're better off in just not you spend an awful lot of emotional inventory to make that happen. So, having said, if no more questions, I'll go on to another one that we can look and we can draw.
Question for you, though, Al. I actually have a question.
Okay.
When I'm looking at my alerts right now, and I don't know if we've ever even asked this question or even talked about it. Normally, our alerts are on 15-minute charts. How do you handle those alerts that come in like the 1721s that we had tonight? I guess that's 1821.
Yeah, I put them right on 1721. That's one reason why when we draw our alerts, we draw them on the 15-minute chart, but I will actually move the alert line on the 1-minute chart to the exact minute. And because what we do is I'll get it close, like for instance, let's just use the New Zealand US. That was like at 621. Let's say 621 New Zealand USA sending. So let's go to that one.
Yeah, I want to see what you do there.
New Zealand USD. Here we go. So here's the New Zealand USD. I'll start with a clean chart. On a 15-minute chart. And that was, the alert was at 18, so it'd be 6:21 in the evening. So I'm going to go and get my tool. And I'm going to go with 18. I'm going to start with 1815 is what I'm going to go with. 1815. And I'm going to, and it was ascending. So I want to start with my A down low. Again, I'm looking at these pivot highs. I'm just seeing, I don't want to make it too steep. So I'm going to come back down and look and see where I can find a place where I could maybe start with a pivot low somewhere before the alert, but yet not have it so it's too steep. So I'll probably start with, again, I'm looking at, there's a wick, I'm going down. So I'll start maybe right down about to this point, and I'm going to take it up to the next highest wick. And I'm going to come down to the next lowest wick, as close to that as I can. And then I'm going to flatten it out on the top. That's the way I would draw that on the 15-minute chart. Now I'm going to go to the 1-minute chart.
One of the things Al used to teach me when he was early on, he likes to snug his C as close to the alert as possible, and then make adjustments from that point. So if you're starting out and you're brand new, think about keeping it basic and you'll get the ebb and flow of, okay, I can move this around a little bit. But he always taught from the very, very beginning, snug that C as close as you can.
Right, so here's the alert. Now it was 1821, so I'm going to actually take this all the way to 1821, right to there, because I'm using the, because I'm always fine tuning my charts to the 1-minute chart. So I'm going to take this one right down to the bottom here. Now here's the alert, so I can actually snug the C right to this 1 minute there. I've got my B up above, and I'm going to flatten my D out. And you can just see where you can flatten it out to where you can see that white trend line. You can see, and you can just see right there where the trend line lines up with the yellow line.
And the reason he flattens it out, guys, is because if you look, there's no other pivot point on that B line. And therefore, that flat gives us, we know the price went there, it was rejected once. So it's naturally going to be a price point that we need to analyze and respect. So we flatten it out. Flat tops are pretty nice.
Right.
And flat bottoms.
Yeah, and the other thing is I like to see when I have an anchor, and I like to see a hit in the mid-range. Now, I'm okay. I would be okay at this point. I would be okay taking this one up to this area right here. Still have the anchor. Here's the hit. Here's the hit. This is what I mean. I'm trying to, at least on the ascending part, I'm trying to get at least one hit if I can. And then I have to pivot high. So I would be looking at this area of the break. I'd be looking at, now this thing pretty much broke right at the C. I mean, it's like there was like no time at all before it started to break. So unless you were sitting right on it, you would have to be looking at this area right here for a target. That'd be one target, and then we'd have another area down here for the target on the A. And then the question would be, is there enough room that if it breaks the bottom of the wedge to be able to reach one of these two targets? And so you're going to measure it, come out for the C, and take it from the wedge, come down here. Again, your second target where the A is at 8 pips, so it's doable, but it would be a stretch. Then the next area that I'd be looking at is I'm coming over here, looking for a wick to a body, and I'm looking. The other thing is you're looking. Here's the 62 moving average on the 30-minute chart. That would be another area. And you can see where it came down and it bounced right off of that. But like I said, you have had to be right on this one pretty much to be able to catch it within that 2 pip area. I'm going to draw my parallel trend line. Let's see here. Let's go with this. It's at 66.9. So I'm going to go with 64.9. right there.
Oh, we
This
have a
is my
brand new
parallel.
iris alert.
Oh, yay.
So yeah.
Also, also, okay, let's go do it. So anyway, you can see where this thing came into the area and then it broke out. Okay, let's go with the Aussie US. So we'll just do this.
That's a 2100 Aussie US descending at this time.
Okay, I'm going to start this with a fresh chart. Come over here, descending. So it's going to
Descending.
be coming up from here. So we're looking at an area like that. I'm going to come over here to the pivot low, come on up to the next, and I'm going to flatten
Nice.
it out here at the bottom. Now I'm going to put my marker in here so that we know where it is. That's a 2200. So I can't really count this candle, but I can count this one and this one. Now we also have, you can also take this A all the way back to here. That's from, you can see where this sort of broke. Here's where the daybreak was. Came down, here was the pivot low, came back up. And so it made a little bit of a descending. And while we have a flat bottom, I'm just going to flatten that out. And I'm going to take a look at my 1 minute chart. I'm going to slide this over to tweak it as close as I can. My A is over there, sits right in a good spot. My C is right here at the pivot. And my D is all the way over here where we flattened out. Now I could probably take it to have my B. Here's my first hit, and here's my target for the D. But this would be the main wedge. So, and with that, we're looking at for targets. So if it breaks to the upside, let me go back to my 15-minute chart. If it breaks to the upside, if it breaks to C, there's like no room at all. There's like 71.86. And if it were to break it even like right now, it'd be 71.80. It's only 2 pips to the C, so that's not going to fly with me as far as the target. So I'm going to have to use the A. Now the question is there enough room to the A for a target? And is there enough room to where the B is? Well, the B is pretty much all flat. And you're going to have some problem getting through this area because this is all buyers that came in. The buyers came in here, came back down, retested this area. So this area is another area that's going to be a point of interest. Now the question is there enough room? If it breaks from where the D is, it comes down here, you've got 14 pips, so that's enough. That looks pretty good. And is there any fib lines that are anywhere close? Well, there's a green fib line. That's a 15-minute green fib line. That's significant. So if it can break through that, then we have a good shot at coming down into this area. Go back to my 1 minute chart. So we have all of our targets, potential targets set. We have a flat bottom. I need to spread this out a little bit so we can see it. So this would be my first target. If it breaks through, we have 14 pips. That's good. See where our fib lines are. We should have a blue line that's significant. So this is an area that I want to see a breakthrough. Now we do have a 62 moving average, 30-minute right here. But all of our moving averages in the 1 minute chart are all in the right direction. So we're going to check and see how strong this thing is, how strong this
Perfect
move
scenario would be for it to break down below the 62 moving average, come back and retest the wedge, and bounce on the short side of the 62.
Exactly. Now this area right in here is, there should be about 71.76 to, so between this green line and this blue line is 7 pips. And right now we're already in the middle of that. So this is really our basing zone that we're looking at. Now these are significant price points. So I would like to see it be able to break through this blue line, pass it, check it, come back into the wedge, because the wedge line is right here. So if we can get it to where it can come into this blue, pass it, come back and recheck anywhere between the blue and the wedge line, then we have a really good shot at making this target down here to the red.
especially if the RCS stays like it is.
Especially in the RCS right now, if you look at all three time frames, let's see where we are with this. This dollar is, we have our 3-point spread here. U.S. is spread by U.S. second currency of the pair. So if the U.S. is the strongest, we're looking for it to go short. And let's see, we have a 4-point spread on the 5-minute, and we have the spread on the 1-minute. So if this thing breaks the wedge, we're good to go. Now we wait. Let's put our 2 pip sell zone in here.
Our guide.
So we have this right here.
And we developed this a couple of weeks, I guess, probably about a month ago. It just is a great thing to do, to put those little zones there to keep you from being trigger happy, because really the trading is nothing more than your mindset.
And that's exactly right. And so we're going to make this a, oops. Let's see where we at. Save, enter. What happened here? Template. There we go. Enters the cell. So here's our sell zone. The bottom of the wedge to the 2 pips away. Our 30-minute 62 moving average is right here, but all these are in the right direction. Everything else is looking good. Our RSIs are below the 40. They're just hanging out here in the below. And now just see if we want to be able to take this trade. When it comes into we want to come into the zone with a red candle, close inside the zone. Preferably give me a little bit of a blue candle wick, and then once it comes down, we're in the trade.
Let me throw out a reminder for those that missed this morning. This week is really weird. If you're not good at trading, it's a good time to just back off and do a demo. A lot of news is coming out this week. It's the end of the month. So when we see the RCS, like currently right now, the U.S. is 7, Aussie is 2, and we see it going, if it doesn't move, it's because there's no volume to make it move. Even though the currency has strength for the U.S. and the Aussie weakness, just because it has those numbers showing there, if there's no volume to push that strength, it doesn't go anywhere. So be very well aware that even though you have a 7 and a 2 or 7 and a 3 at the current time on a 15-minute chart, doesn't mean it's going to move.
Because you still need the volume. You still need the volume.
You need the volume. You need to push the volume. Turn it up.
I mean, right now you have you have all 3 red on the whole moving average. That's a good one. You have both of the 2 are red on the 5-minute. The 15-minute still hanging there, saying this green. So, but it's probably not too far from turning red, just by the fact that the other 2 are. And this one just turned. It's going back and forth to green and red. But again, you have to look and see how much has this really moved since in the last, let's say the last hour. Let's see what the range is here in the last hour. That's 11 pips. That's not too bad.
Not horrible for this time of night.
Not too bad.
It's not bad.
It's doable. But until we get a break, we sit on our hands and do nothing and just ask questions and
make fun of people.
And make fun of people.
That's what we do. It's just who we are. I feel like I'm talking through my nose. I went and played golf yesterday after the session, and strangely enough, here in Texas, it rained. So I was soaking wet. So now I got this head cold going on. I feel like I'm a duck.
Let's see.
No questions yet. I'm keeping an eye on that as well.
Okay.
That was a pretty good breakdown on a live trade. So that's pretty cool.
There were a couple of good trades today that actually even like the Euro US, we've been watching that quite a bit here this week because it had such a strong move to the upside. But it's just been kind of whipping everybody around for a little bit, and we haven't really been getting that many alerts with it here just recently. But I'm kind of waiting for an alert to give me some direction for it. So right now, it's
sure. I think it's difficult to get wedge alerts when you have parabolic moves.
Yeah, it takes a while for it to settle into to get some
sort of consolidation.
Exactly.
I agree.
but it has some really pretty pretty interesting moves. We had a nice one today this morning with the British U.S.
That was
It
good.
it was it took a while for it to develop, but it finally developed for it.
And that US yen that we worked on, I guess a few days back, that we left hanging to see what would happen, that worked out nicely. That was one of those ones where you didn't want to sit at the computer all day long, and it worked out.
Yeah, sometimes it just takes. I mean, sometimes you just have to set your stop, set your target, and walk away from it,
Walk
and just
away.
be willing to accept whatever happens. Happens.
Those are really kind of the best trades, to be honest, because you're not mentally and emotionally getting tied up into it and changing things on the fly.
Yeah, and you'll see it go up, 5.5 pips, and it comes back down and gets back to break even. It goes against you 3 pips, and you say, "Oh man, why didn't I just get out 5 pips? Because
Right,
I wouldn't have to
right.
be thinking about this." And then it goes back up and hits 6.5, maybe over 7, but it doesn't quite get you out. And then it retraces. I mean, just like it just plays with your head for, and that's just what it does. But you have to. The best thing to do then is just kind of set your stop, set your target, and then walk away.
And this is a
Because it,
great example of how the U.S. is still 7 across the board, except for the 1 minute chart. And the Aussies hanging and flip flopping between 2 and 3, yet we're still going up. So it just tells me that we don't have the volume that we need in the currency market right now to
yeah.
get that number 7 strongest pair to really push.
If you look where this thing's flip flopping from 3 point spread on the, you're only looking at 2 pips.
Yeah.
That's basically, and your spread. Let's see what's our spread here on this one. Our spread is 1.6. So basically, this thing's flip flopping 3 points, only reference to the spread.
Uh-huh. It took a lot for me to go from a daily chart all the way to a 15-minute and not freak out at movements like this on a 1 minute chart, because I'm going on a daily. If I see 3 candles like that, I'm panicked, because that's or I'm real happy, one of the two. So that it does take a little different thinking. A question for you, Al, in the Q&A, a newbie. Do you only take the trade when it's going with the trend?
No. I take the trade when it is breaking out of the wedge. And basically what the wedge is basically, the wedge is one of two things. Either one, it's a consolidation after a long move in one direction to consolidate to move higher, or it will be a consolidation as a reversal point at a high or at a low. So when we get the wedge alerts, basically we're just saying is that it's not trending at all. It's just going, it's prices will do one of two things. It's going to go up, it's going to go down, or it's going to go sideways. Basically, when we have these wedge alerts, it's basically going sideways.
Right.
It's going sideways within a range. But once it breaks that range, that's when it starts to trend. But we're trying to catch it right when it breaks. And then once it breaks, then you can maybe go and catch the trend. Now, this particular pair, if you see right now, if you look at this chart, you could say, which way is it going? Is it going up? Is it going down? Or is it going sideways? And as I look at this thing, I can say, yeah, this is up. Yes, this is down. But the reality is it's going sideways from a longer time frame. And this is and the wedge is now in this consolidation zone. But the reality is that once it breaks, it's probably going to break. It's going to have a bounce off of here. Or if it breaks to the upside, it's going to bounce off of here. And you can see right now, it's pretty much right smack dab in the middle of this range. And what you're doing is you're looking for these wedges to break out of the sideways range with enough room to where it gets to at least, and then if it can break, it's going to break, probably bounce off of here. So you want to make sure that you have enough room from the bottom of the wedge to here, which is 13 pips. So that's enough to get your 7 pips. Or if it breaks to the top, breaks from the top of the wedge, wherever that may be. Let's say the price is right here. breaks from here to the top of this box, you have 12 pips. So you can still get your 7 pips from the full range of where the box is, but you want to make sure that you have that wiggle room to do that, or else there's no point making the trade.
And I would say too, Al, to add kind of what you're saying along the lines, I trend trade when I do my wealth bucket investment type trading on Monday nights when I do my sessions there. I do a wealth bucket, so I'm definitely aware of trend overall. I'm also aware of what retail buyers are doing. When we drop down to these 1 minute for precision entries, you're really not trading trend as much as you are trading momentum. And the big thing
Right.
the big change is that when I'm doing my swing trading, I am looking for a minimum of 70 pip move. I'm looking for 70 to 800 pip moves. That's what I'm looking for on those charts. When I come down to the 1 minute, I'm looking at proper position size, maximizing that position size with at the same time minimizing the risk, and only looking for 7 pips. That's all I'm going for. And because I'm using proper position size in a 7 pip move, we could easily get our 1, 2, 3% a day. Again, that's past performance, not going to be indicative of future, but that's our goals. And if you're able to average 1% a day every time you trade, that you are going to be one of the top traders trading forex. It's just the way it is because most people get in their head.
That's basically 250% a year if you get 1% a day.
Yeah, and who does that? Now there are some people who can, and they do it for some can do it for long periods of time. Most can only maintain it for a week or two because then they start thinking too much. They get overconfident or they start tweaking things. And traders have a tendency of tweaking optimized systems to take them right out of optimization.
And if you look
Happens
at
to us all.
if you look at this 15-minute chart, you can see basically this is an uptrend. This was an uptrend. There was a little pullback. Here's another uptrend, and here's our consolidation. And you can see even like when you had this nice uptrend and a nice drop pullback, but right here, here's the consolidation. This is going sideways.
So here's the question, piggybacking. They piggyback the question for you. So when the wedge says descending, it doesn't necessarily mean the trade is going to be a bear trade or vice versa.
That is totally correct. That's absolutely correct. And I would say this, if it's saying descending, you have a 50% chance it's going to go to the upside. If it's saying ascending, you have a 50% chance it's going to go to the downside. But basically, 50% is basically it's a roll of the dice.
The key is Al does great at this. He sets his playground. Before he ever enters the trade, he sets his playground. If it doesn't look right, he doesn't take the trade. After setting all his parameters up, if it doesn't make sense, he just walks away or waits for the break on the side that does make sense because one side will make more sense than the other.
Right. And then you just play the odds.
And then you play the odds.
Yeah. Now, one thing about this move, if you look at this, I mean, let's just use this as a good example while we have some time here. It's really not doing anything I don't think.
Yeah.
I don't think it's really doing anything. This is a good example for just a little bit of technical analysis. And there's a lot of times if you get a nice little move, and if you draw a retracement, so let's say take this move right here. I'm going to draw a retracement. So I'm going to start from here. I'm going to take it. Oops, where is it at here? I don't know if this one's going to work or not, but we'll use it as an example. Now I draw. Here's the trend, like to this point here, and say it trended up there, and it now pulled back. And let's say it pulls back. Usually, if it pulls back within 30, right now, if I were to pull this all the way back to see where these little white and green lines, that's basically 36 to 40% pullback. If it pulls back less than that, in this case right there it did, you can oftentimes look and see if you have the pullback like right to there, a lot of times you'll find out that it will target up into this area. Now this one's not exactly doing that, but on the smaller time frames, when I get a pullback and it looks like it's starting to trend, and you get where it has a nice big move and it comes back, basis comes down a little bit, it only comes down like 30% of the move. More often than not, it's going to come up and tag this area right here. And actually, if you look at this on this is a bigger time frame, you'll see that this zone right here was tagged. And so, I mean, that's a really nice little move. Maybe we can even do it. Maybe this one might be a little bit better. Let's see if I can do that. Oh, here you go. This one's a little bit better. To example, yeah, this nice little move up.
And as he's planning and preparing this out, just know that this is just a little bit more advanced technical. If you're a newbie, you don't have to do this immediately. You'll figure this out later on. But this is why this is some of the stuff he's thinking as he's going through. He already knows this pretty much where the numbers are going to be in his mind. He already knows these because I know him well enough and been around Al long enough. He already knows, but he's showing you the display of what you can do in the future. But if you're a newbie, don't worry about this part.
Yeah, this is just sort of just a little something. But you'll see that
bonus, right?
Yeah, this is a little bit of a bonus while we're waiting around. But you see how it came back, pulled back, and went right on up, right into this area. And then it pulled back again. But you see where it stalled right in here. And so, and we'll see that over and over again in the daytime on these, especially when we're on a 5-minute or 1-minute chart. You'll see where it has a nice strong move down. It sits there and just goes sideways for a little bit, and then takes another strong move. A lot of times, it's not unusual to be able to target almost exactly where that other move's going to be.
They are fun. Now, Awa, are you on? You're on 15-minute chart.
Yeah, I can go back to the 1 minute here.
Can you? Is your fib tool is showing on that your plotter?
On
your 5 minutes. On your 15, it wasn't, right?
It wasn't on the 15. I could put it on.
Okay, so guys, what this is, fib.
Actually, it is right here.
Yeah. So these green, red, blue. These are tools that we use. This came from my Monday night session trading swing when I was starting to blow up my account and getting frustrated. And I went right back to the basics of just saying, okay, what is price doing? Because you can be sold all sorts of things that aren't going to be price related. They're the answer to all things is the holy grail. But when it comes down to it, back in my banking days, we never looked at a chart. I've never seen one until just in the last 10 years. So we always bought on dimes, quarters, and 50s. So you have dime every 10 cents and stuff like that. So that's some stock that was with mutual funds. And it's the same thing with currency trading. It's the same thing. So I went back and manually plotted these lines. Well, a developer came to me, a friend of mine who programs, and says, you realize you plotted fib numbers. And I had no idea what Fibonacci was. I didn't understand it, never studied a book about Fibonacci. But he created this tool for me, and we ended up finding out that, as you see here, Al's putting these different lines on here, and look how prices reacted. We don't know if it's going to bounce off of it, or is it going to hesitate there, or is that going to be the place where a new trend starts? But there always seems to be some sort of reaction at these various different fib prices regardless of time frame. It happens. I use it on my daily chart. That's mainly what I use it on. But I'm now learning to use it on the 15, 5, and 1. And it still applies in a smaller time frame. So what it also does for us, it gives us confidence when we're in a trade that we can. You'll hear Al say, well, I would expect that this will bounce here at this blue line, because it's giving him confidence to hang in the trade or not get into it too quick. Let's see what happens first. So it's giving him that confidence of saying, okay, I expect this to happen at this point. Is he 100% correct all the time? No. But it's an incredible tool to be able to predict hesitation or breakout points. It really works out well. So semi-newbie, that instrument makes a lot of – yeah, it does. Welcome to AIRIS. I think – and this is just my personal opinion – I think you found the best manual trading wedge alert system that's available currently. I don't know all the algorithms that go into AIRIS. I don't need to. I just know that when it does give me alert, it's been pretty solid of giving solid alerts. And then we have to do our work. It does a lot of the hard stuff for you, but you still have to be able to practice drawing those wedges and then get used to watching Al and how he uses these tools. We're still in negotiations on how to get these tools, make them available to all of our traders. So you'll have this. Well, our goal is to have your screen look just like his screen. And that way, when you come in, it makes sense for everybody.
And one thing you may be wondering, where do we ever come up with 7 pips? Why not 6.5, or why not? If you notice where I have these blue, when the fib lines of the 5-minute chart, they're a little bit wider apart. And actually these lines, this 5-minute, from this blue line to the red line, is 21 pips. Well, if I put the fib lines on the 1-minute chart, you find out that they are right in between. And you have, what it does, it divides this 5-minute space into thirds. And guess how many pips are in between each one of these thirds?
7 pips.
7 pips.
So initially when we started, Al and I started going for our 5 pips, proper persistent sizing with 5 pip goals. Nothing wrong with that, but I started realizing we got spread to cover. So we said we go to 7. We didn't know at that time that the fib numbers would fall right on the same thing.
And this is another reason why when I see the wedge, I like to see where one of these fib lines is close to where the wedge is breaking, because that's going to be a reference point. You can see, like right here on the screen, where it came up, it passed it, it checked it. It's been bouncing back and forth over this green line.
That's only about a pip.
Only by a pip. And so it comes up, pass check, comes up. Now a nice big move. Now it's coming up to retest. If it retests this line, the more than likely, if this one gives way, it's coming down to this one. So then that's where your 7 pips. So if we have a break of the wedge right by one of these fib lines, I'm going to be looking for the next target to be 7 pips down below, and see if I can find a region over here that where it makes sense, to where as I come over here, here's a wick, here's a body, here's the next body. So right in this area is right where my target is. So if it can break through this area, and once it breaks through my 2 pip zone, breaks through the blue, comes back up, retests the zone, now this is my next target.
In this case, I would wait for a break below the blue. And it may mean that we miss the trade, but I would not take, normally I would take the trade inside that area regardless, but not with that blue line sitting there.
And you're looking about
I've seen it happen too much.
And you're looking about a 1/2 pip between the red line and the blue line. It's only a 1/2 pip.
A half pip head fake can cost you your account.
Yeah.
If you're not wise.
So that's why a lot of times we're looking to see if there's a fib line right there, especially if this is a 5-minute line, if it can break that, that's a strong line. And usually what happens, you'll see it'll bounce and go to the next one, it came down pretty close to it over here where the B was, came back up, and you can see look where it came right up to the red line, bounced through the greens, check-ins right now. So this is the 7, and then about halfway between the two. That's why a lot of times 10 pips or 12 pips is the next target, because if it breaks that, it goes up halfway between the two. And there you go, you have 7, another half between 7. That's about another 3.5. So you've got 11 pips, 12 pips, and that can be your secondary target.
And we call this finding order inside of chaos. If you're a newbie, all these lines and charts and things seem crazy. But if you can find some order inside of the chaos, then it makes it a whole lot more simple to learn. You can actually, and Al has done this on several sessions, he's turned everything off. There is no MRSI. There is no RCS. There's no moving average. It's
just like this.
You can move all the moving averages. I do just fib lines based on your wedge drawing, and you can be completely successful with it. The other things that we use are just there for confidence. That's all it is, because it is a mind game. 99% of trading is in your head, strangely enough, because we have preconceived notions that we've been programmed in our brains, and we have a hard time breaking through some of those long time belief systems. And we never tell any group that we're helping that we're 100% correct. We don't say 90%. We don't need to be 90% correct. If we're proper position size, we could still be 50%, half and half, and still be profitable. I've seen people make a lot of money being 30% correct. Question is, where do you start drawing the fib lines? This is a tool that's automatic plot. It's called a price plotter. It's probably not a great name. We're going to change it because when people think of fibs, they think of fib retracement tool where you're taking a high and a low. This is not that. It is truly the fib numbers that you have, the standards done to a clock algorithmically, and then they plot automatically. That's a tool currently called FPRP, which you can see up in his left-hand corner.
And it has absolutely nothing to do with price. It's a price on a number line, not price on an action line.
And it does not move. So on a 1 minute chart on all the US pairs, a supply line will be at 71.83.6 always. And red just means resistance. Green means demand. Blue means a wall. Again, it's not meaning that it can't be broken. And usually price will trade from wall to wall, whatever that might be.
Yeah. But you can see like this thing came out at 10 o'clock and it's already 10:30 and it hasn't moved. Oh, let's see how much.
And this is what you were talking about, Al, where you don't normally get into these because you don't want to stay up and watch them.
In the last half hour, it hasn't moved more than 6 pips.
It's amazing. Amazing speed.
But you'll find out a lot of times in the morning if you start getting alerts like around 7, usually around 7 o'clock, 6:30, 7 o'clock, you start getting some decent alerts. And they have a little bit of punch to them because that's right when the London market's opening up, just before it's a pre-market for the US. And you'll get some really nice moves before 9:30 in the morning. In fact, more often than not, we can get our trade for the day before 9:30. Oftentimes before 8 o'clock, we get in here. I'll get in here at about 7 o'clock, and by 8 o'clock, a lot of times I have a trade I'm already done before we even open the session in the morning.
Yeah, me too. Me too.
And we often say, we use the term, just get your daily bread, and that is get your trade, get your 2%, and then stop trading, because more than likely, if you stay long enough, you'll give it all back and then some. And nobody is exempt from that. I still have that problem sometimes with myself. Especially as I sit here, talking the charts, describing the charts, I say, "Oh, there's a trade. I can go and take it." And then usually, more than oftentimes, sometimes it still works as I'm trying to show the methodology of how we do this. But oftentimes, you're just better off and if you want to keep sitting here, just do it in demo platform and keep practicing, because that's. You can't practice enough, but you can overtrade your live account, and then you start playing with your head with your emotions of, well, why'd I give it all back? And it's the other thing is you're starting to see, like with this, I'm using like a little bit of a secondary trend line. As you can see, it had a nice move down, came back up, and now it's starting to actually form almost like a whole nother wedge right in here. So if it does break out the bottom, I'm going to be using this wedge, this trend line, so to speak, if I can draw it. I would be using this trend line as a area to, if I do get in short on this move, I would start using this trend line as a line of support to stay in the trade until it breaks out the top of it. I do not take the trade with this, and I would not try and take a trade inside the wedge unless there was some compelling reason why I just couldn't not do it. But for the most part, I'd like to wait for it to come out of the wedge before you take it.
Question in the chat box: any updates on these indicators on TradingView becoming unlocked? If you're one of the ones who are new since we became Hawkeye strategy with this, we are in negotiation. Al doesn't know this. He's supposed to meet with Sal tomorrow or the next day to discuss how we can make this happen. If you are one of the people who had the opportunity to get them early on, and they haven't been unlocked. The developer's father passed away yesterday morning, and so he is out of touch for a little bit. So we will get those done and give you guys an answer just as soon as we find out the answer. By the way, Al, you have a meeting tomorrow with Sal.
Oh, I'm glad you told me.
Tomorrow, Friday, I think he said. So.
Okay. I will be around part of the day tomorrow. Most of the day tomorrow.
I told him right after our session if it was possible.
Yeah, that'd be best.
Yeah. So we're working on it. We're working on it. Just be patient with us.
Yeah, it's taking longer than we would like, but it's going to happen. I'm confident it's going to happen.
Just got to do it right.
Yeah. And is there anything else we could show anybody? I don't know if it's the one like we had today, like the Euro US today, or here's the British. Let's try the look at the British US that we had this morning at 7. We can do that real quick here before we have a little bit of time left. I don't see this thing developing into a trade before we get done here. It's like watching grass grow. And British US. And I'm going to go to, let's see, that's 7:45.
Keep an eye on the other pair. If something happens, and if it doesn't, we'll go through this and then call it a night.
7:45. That was 7:45. It said a replay. So here's what we had this morning. First thing I look at is all of our moving averages are in the right direction. So I'm looking at this thing going to the upside. My RSI is out of the 60 range. I'm looking for it to go to the upside. And if we look at our RCS tool, once it propagates here, we'll probably see it's supposed to go to the upside. And it was a descending wedge. So it's actually looking at this little area right in here. So I'm going to start with my A up here because it's descending. I'm looking down for it to head in that direction. But I'm also going to bring my line up, bring it down so my AC line is descending, and then I'm going to flatten out the bottom. And that's the way I would have drawn the wedge. I'm going to put it on a 5-minute chart. I'm going to fine tune it. And I have a hit. And again, I'm looking for multiple hits, an anchor with a hit and another hit. And here's our wedge. Take it to a 1-minute chart to fine tune it even more. That looks good there. That looks pretty good there. My B, I can probably bring that right there. That's good. And my D is a flat line across. So now we're looking at our moving averages they're not all red, they're not all green, so it's still not quite ready to break out. There we go, there it is. And we had now we're on a 1-minute chart, so this isn't going to carry a whole lot of weight, but we can be looking at the whole moving averages. We want to see these all green to the upside or all red to the downside. And I want to see to the upside, I want to see both of these RSIs coming out of the 60. Let me spread this out a little bit so you can see a little bit better. And we're going to do the replay 1-minute charts. And it's right in between the wedge. Okay, here's the first candle that broke. Let me just see if it's within our 2 pips. Let's just go and draw this again. Market here, it's at 73.3, 75.3, right about there, that's close enough. Gonna lock this and call this our buy zone. Enter zone to buy. And you can see that we had a nice strong candle coming up, broke, very, very little wick. And so that's a good sign that that's strength with not a lot of downward pressure. At this point, I would probably be okay taking in. All these moving averages are coming right up. They're all strong out of the 60 zone. I would be looking at the other time frames, but also have all three green over here on the whole moving average. So at this point, I would be looking at, we had a nice candle up, retrace, retest the wedge. I would be okay getting into this trade. Call it right about there. Call this entry to buy. And this one kind of played with a head a little bit. All our moving averages in the right direction, and we're going to keep on going with and it broke through. So right now we're looking pretty good right now. It came back, still now we had this strong candle coming in. Now if you look at a fib line, I don't know if you just see that, but now I may not be able to read it from here. Let's just see if I can. Here's a green line here, so we're going to be looking at 7 pips above that. So that's going to be 68.75, we're going to call it right there. So right here is where the next red line would be, right up in this area. I'll make this, well, we'll just keep it there like that. So anyway, this would have been, you had about 3 or 4 pips right here. It came back, retraced, retested the zone, went back into the, retested the wedge again, came right back up again. And I think this may have been giving us our 7 pips. We have, if the break was here at 71, so at 78, we would have our target right there. So here we had the target. And it came back down, retested again. And then it came back in and started giving us a little bit of a problem here. This is where it took some people out, even though you probably still had 7 pips. It was just like it just wasn't behaving properly, but it was only 5 pips. It came very close to where you have had your stop. Your stop would have been right down in this area at, let's see, 64-ish, we'll call it. This is the stop zone. Came out and just came right down to that. May or may not have taken people out. I think some people just got out because they thought it was going down, but came right up and then it started taking off. This one had one chance to get your target. There's your second chance to take your target. There's your next target. And your trade was done for the day. And it probably still kept, I think it still kept going up for a bit. You see, now this is trending. This is trending. But one thing I think I looked at this one was I was talking earlier about the Fibonacci retracement. You have a tool here, come down, it comes back up. If it comes down and retraces, right there is about your 38%. And you can see right where it went. Here is your target zone. This is what we're talking about for the target. And what I do is I usually draw a box from the 1% to the 78%. And then I go up and I split the difference. And this is the zone I'm looking for it to come back into. See where it came right up? Just tagged it. Just tagged it. And now it's going inside of it. And it still keeps on going. And it still kept on going. And that was the end of the trade. So, any other questions?
There
There are no questions in the posts on chat or the Q&A. And the Aussie US is just sitting exactly where it was when we left.
Yeah. hasn't moved much. And so even though you have an alert, doesn't mean it's worth taking. And not saying that the action's not going to be right or not that it's not going to break out. It's just going to take a few while. It's going to take a while for the Asian market to kick into play, and or maybe near the end of the Asian market where it's going to.
For our
It'll
newbies,
do
Al,
something.
before we go, there's a new IRIS alert that just came in.
Oh,
It's another Aussie US. It won't change anything.
22.
So can you explain to the newbies especially, what do you do when 45 minutes later you get the same identical wedge alert on the same identical pair? What do you do?
A lot of times what I'll do is I'll just redraw it, or I'm going to also look and see where I may just adjust my lines, especially like in this case, it's the exact same alert descending only 45 minutes later. So what I may do in that case is I may go ahead and move this one over. Then I might move this one over, see if I have, I'd probably still hold this. Here's a nice little hit. You're not talking, that's 86 to, you're only talking 1 pip. If it only breaks it by 1 pip, I just let it go. I accept 1 violation of the trend line, but I might just move
really
this one
change.
over, and the bottom hasn't changed any.
You could pull that D out a little bit if you wanted to give you that other angle.
Yeah, I could maybe pull it up like this one, because this way now I have my third hit here, my B, my hit, and now my first hit, the second hit. And so, and then I might maybe say, okay, maybe I'll take this area and maybe I'll draw I'll put my, this is still a reasonable zone up there. I just draw that knowing that that's probably my 2 pip range. But you can also look and see, okay, you have your C here. I might maybe take a look at maybe something like that, but that's not going to really change anything because the wedge is still there.
Right.
And I'm going to then maybe I'll just move it over to where the next alert was, right there.
Any questions on that? Because I don't see this changing while we're sitting here.
Nothing has really changed with the picture.
No, still the same. Good wedge drawing. All right, since there's no questions, Al, I say we vote to shut down for the night. Thank you guys for coming out. Oh, we got a question. Oh, yeah, good. We said it makes sense. No question, just a comment. Very cool. All right, everybody. Y'all have a great night. We'll see you guys in the morning, if not sooner.
8 o'clock in the morning. We'll see you then.
8 o'clock. Y'all take care.
All right, take care, everybody.